Hi there, I'm Matthew Wiseman, mortgage advisor at the Money Hub, who are authorised and regulated by the Financial Conduct Authority. This is a quick video about secured loans. I'll be giving you information about what secured loans are and why people take them out. So what is a secured loan? Now, a secured loan is also known as a second mortgage. So this is a loan which is secured against a property, maybe your home, and it will sit behind your current mortgage lender. Now, people typically take out secured loans when they're looking to borrow larger sums of money for things like home improvements or debt consolidation. Now, when it comes to borrowing money, you should always look at all the options that you have available. So for example, you should look at unsecured loans, you should look at a further advance with your existing mortgage provider, you should look at remortgages, and you should look at secured loans. By working with a mortgage broker, you can sit down, go through all the available options you have in place and get advice accordingly. So why take out a secured loan? The common reasons why people take out secured loans: firstly, avoid your redemption fees. So let's say you're in a current fixed rate on your mortgage. If you was to try and remortgage and raise the money that way, you'll more than likely have redemption fees to pay, and these can certainly be quite expensive. Whereas if you take out a secured loan, you can keep your existing mortgage in place and just take out the extra borrowing through a secured loan, therefore avoiding the redemption fees. Secondly, maybe you just want to keep your existing deal in place. Maybe it's a really good mortgage product that you've got in place, really suited to your circumstances, and you don't want to disrupt that. So therefore you could leave that there and then take out the extra borrowing through a secured loan. Thirdly, your credit profile. Now, potentially a remortgage is not possible because you've had bad credit registered against yourself, such as missed payments, defaults, county court judgments, or mortgage arrears. Secured loan lenders do offer more flexibility when it comes to bad credit profiles. And number 4, maybe you just want a separate loan. Perhaps your existing mortgage has got 20 years left to run and you just want to borrow the extra over a period of say 7 years, and therefore a secured loan will give you that option. So who offers secured loans? Now, secured loans are typically provided by specialist lenders and they offer their products through mortgage and loan brokers. Now, secured loans typically take around 4 weeks to complete from application. So what fees are there to arrange a secured loan? So typical fees that you would see are, firstly, a valuation fee. Now this is payable up front, and the cost of this would depend upon the property value and also whether a full internal valuation is required. Secondly, lender arrangement fees. Now these can be a flat fee or they can be a percentage of the loan you want to borrow. And thirdly, broker fees. Now, your broker should clearly tell you what fees are payable and when they're payable as well. Your broker should always give you a full illustration outlining all the associated costs which are involved with the secured loan. So what documents are required? So documents that we would want to see from yourself are proof of identity. So this would be your passport or your driving license. So make sure they are in date and also at the correct address. We want to see your last 3 months bank statements. This is to confirm your conduct and your outgoings as well. And we want to see proof of your income. So if you're employed, this is last 3 months payslips and P60, or if you're self-employed, this is your tax overviews, tax calculations, or your accounts. Now, the lenders will always have their own internal documents that they require to be completed also, and the lenders always have the right to ask for additional information to complete their due diligence. Well, I'm Matthew Wiseman, mortgage advisor at the Money Hub. Hopefully you found this quick video helpful. If you have any questions, please get in touch. I'll be pleased to help. The Money Hub is authorised and regulated by the Financial Conduct Authority. As a mortgage is secured against your home or property, it may be repossessed if you do not keep up the mortgage repayments. Think carefully before securing debts against your home. If you are thinking of consolidating existing borrowing, you should be aware that you may be extending the terms of the debt and increasing the total amount you repay.